88 million ounces of registered silver were reported as deliverable in COMEX warehouses as of yesterday. Now, this is happening while open interest represented about 581 million ounces of paper claims. That's a little over 6 times more paper than actual physical metal. In this live stream, I'm going to show you how the price of silver is dampened, to put it nicely. It's being pushed down, or some say it's manipulated. This is how the price of silver is not reaching its full potential. If you're new to this live stream, first hit that subscribe button. Don't miss it. I host this live stream daily, 9 p.m. every day on Pound of Gold. Leave me a comment down below. Let me know where you're listening to, what time it is, so I can get a sense of what time everybody's listening. Maybe I'll change the time that we're hosting this. Let's get right into this. Now, something just happened in the last 14 days that most silver stackers, they feel it, but they can't exactly name it. Deliverable supply stress intensified while the paper market stayed liquid enough to absorb that. Now, this type of disconnect doesn't normally persist when a physical commodity is getting tight, but tightness usually leaks into the spreads. It leaks into the delivery behavior, into the dealer pricing that we see on our local level. And it shows up when silver's out of control in the microstructure sense of it. Because when futures market can be clearing prices even as the delivery pool gets thinner, we know something's going on. Now, almost nobody's noticing because we're all watching the spot price. We're all looking at, oh, yesterday silver crashed down $10, $11, $12, and then it corrected itself to a price that seems stable. That's what we're looking at. But really, while the system's covering this ratio, really, in terms of paper to silver, meaning the amount of paper futures claims, contracts, can relate to the amount of actual physical silver, it sits around 15%. Registered metal is actually down 16% over the last 30 days. That's a pace that makes the next few weeks actually, far more sensitive than the chart first suggests. In this live stream, I'm going to first show you how the COMEX paper stack can mute physical stress signs in the short run. Then I'm going to break down how the last 2 weeks of inventory, of delivery, and open interest, how that behavior fits together. And stick with me to the end of this live stream because I'm going to explain to you how this structure can keep silver from looking normal right up until it's not. And then we're going to get to today's charts because my goal of this live stream is to break down the movements every day that silver experiences. And my goal is to explain it in plain English so everybody can understand how these charts are showing us or giving us a great insight into where the price of this metal may be headed. Now, lean in close to this because this is critical. When you say they keep the price of silver down, the strongest version of that claim doesn't require a cartoon villain. It really requires a design feature. COMEX is a futures market built for risk transfer, not for ensuring that every paper claim is backed one-to-one by immediate silver bars. I need to say that again because it's so important. COMEX is dealing with the futures market. It's not trying to create a market in which every claim is met by an actual physical bar meeting that contract, meeting that claim. So each COMEX silver contract is 5,000 troy ounces. And most contracts are open and closed financially rather than standing for delivery. That means most contracts don't deal with any actual physical silver showing up in anyone's hand. It's so important to really understand that as we look at how the price of silver is kept down and it does not reach its full, real actual value in the market. So that's why you can have open interest equivalent to 581 million ounces while registered is 88 million. That's the difference. That's an 8-to-1 right there. And really the system relies on netting. It relies on rolling cash settlement incentives so that only a fraction will actually demand bars to show up. The key point, really, of this live stream is that we have heavy paper liquidity that can delay the price response that the actual physical tightness of silver would normally force, because paper can satisfy most hedges, most exposure, most speculation that's going on without touching any actual silver. People trading, people investing in the paper side of this market, they're really not, most of them are not interested in holding any silver. And you know what? In a way, good for you and I, silver stackers, because if all of these investors, if all these traders showed up and said, I'm ready, I want my physical silver, wow, we would really find ourselves in a situation, because there's just not enough physical silver. That would be a true, not run on the bank, it would be a run on the COMEX. If you're new to this live stream, first hit subscribe, don't miss it. I host this live stream daily, 9 p.m. Eastern Time on Pound of Gold. Don't miss it. My goal is to break down the movements of the silver market that happen every day and to explain it in plain English. That's my goal. And let me know in the comments. You know what else I want to know? Are you buying silver at this time? If you're still buying at this spot price, leave a number 1 down below. And if you're selling, leave a number 2 down below. I'm just wondering what you guys are up to. Leave a 1 if you're buying at this spot price. Leave a 2 if you're selling. What kind of action are you doing with your silver? All right. Now, pay close attention to this, because most stackers miss this. In the last 14 days, this really matters, because we're now in a period where delivery mechanics and inventory optics start to dominate the conversation. As of March 3rd, just yesterday, the reported registered silver was 88 million, and the eligible is 267. Eligible is metal that meets specs but is not actually warranted for delivery. That split is the hierarchy of metal. Now, registered is ready to deliver, eligible is available to be made deliverable if the owners want to. In the past 2 weeks, what we've seen in the market is leaning really harder on optional supply. The idea that eligible can become registered when incentives start to rise. And that optionality is one reason the paper to registered ratio can stay high without immediately exploding the spot price, because that would really throw the entire system off if spot actually, I mean, if you've been watching this for years and decades like the rest of us have, you're nodding your head. That would change the entire game. But it also means price can remain contained until the marginal owner of these eligible demands actually demand their higher premium, or want it to be rewarranted, or until delivery demand clusters in a way that the system can't smoothly absorb it. Now, watch this, because when we look at what the delivery tape is telling us right now, we see that on the dashboard, data as of yesterday, March 3rd, today's deliveries were 607 contracts, or 3 million ounces. And the March contracts shows 5,000, about 700 contracts delivered in the period. That's about 28 million. Now, that matters because delivery is the moment when paper is forced to acknowledge that there's real metal there. And if delivery stays elevated while the registered section is trending down, the market has to solve a real constraint, a serious constraint. Either more metals gets warranted, more supply enters the warehouse system, longs are incentivized to roll or to cash or settle, or spreads and premiums have to do the work. None of those solutions requires a price smash. Some actually require higher prices or higher physical premiums going on. This is why the premiums that we pay on a local level can often tell us really what's going on the back end, like we're looking at here. But really, until that pressure becomes unavoidable, futures market can keep printing a single clearing price that looks calm on the screen, especially when liquidity is deep and positioning can continue to roll forward. Now, here's where this gets really important, because this theme of 8-to-1 paper to physical is so crucial. And here's how I could really explain this, I think, so everyone sees the power of this. If you're new to this live stream, hit the subscribe button. Don't miss out. I host this daily, 9 p.m. Eastern on Pound of Gold. Every day I post a live stream, and my goal is to explain the moves in the silver market in plain English so everybody can understand what's going on and you can have a good sense of where the silver price may be headed. Now, the most defensible way to express this is paper claims routinely exceed deliverable supply by multiples. And again, at the top of this live stream, I gave you some of the numbers. The data shows we're about 6 times paper leverage versus registered with a 15% coverage ratio. Now, when we hear this idea of 8 to 1, we start to think that that's stagnant, but the ratio fluctuates. Sometimes it's higher, sometimes it's lower. In fact, recently we were closer to 9 to 1. It's really depending on interest and registered stocks. The educational punchline really for us to see is that even if only 1 out of every 6 paper ounces tried to become a deliverable ounce quickly, tried to actually take that contract and say, give me my silver, I want it delivered this afternoon, the system will be forced to reprice via these spreads, via premiums and inventory incentives. And wow, would those premiums be strong. That brings us to how the price is kept down, because the structure can keep it from repricing today by making physical conversion optional and financially inconvenient, really, for most participants. Now, the how is the difference between price discovery and actual physical settlement, meaning the show, saying I need that silver. COMEX spot is a futures-derived benchmark. It reflects the marginal price where the transfers of that paper risk are clear. And physical retail, you and I, down the stream of this, buying actual silver, our price that we pay, it often reacts with a lag, because wholesalers, dealers, mints, fabricators, like everyone that deals with this actual metal, they manage inventory risk and they turn over the constraints through their premiums. Again, when we see a premium say strong, like we are presently today, when you walk into your local dealer today and you try to buy an ounce of silver, and the premium presently is $9, $10 over spot. Yes, part of that can be seen that as the dealer needing to get a larger margin on his end because people are not buying as much as they were when silver was cheaper. But really, people are still buying silver. They are. New people are coming and buying silver. What these premiums really tell us is the issue that's going on the back end with COMEX and this difference between the paper investments in silver and the physical real supply of silver, that 8 to 1 ratio. Just look at what's going on in China. China, the country that needs, if any country needs silver more, on this globe, it's China, because they are doing everything they can to be the top of the industry side for solar, for EV. Their premiums are still very high. And that gives us an idea of, again, the back end for silver. If you're new to this live stream, hit that subscribe button first so you don't miss it. I host this live stream daily, 9 p.m. Eastern, every day. My goal is to break down the silver market and give you a sense of where the price of this metal is headed. In a moment, we're going to go to the charts for today, and I'm going to show you what we saw today. We had a wild day for silver. Now, just one more point regarding the suppression of silver price and how these prices are kept down. Just focus on this for a moment, because the cleanest last 14 days really had not a single number, but the interaction between 3 different numbers, 3 different dials. We had deliverable inventory, we had delivery behavior, we had open interest that was distributed across months. And really what this shows is open interest at about 1,800 contracts. It's about a little over 9 million ounces, while May for 2026 holds 80,000 contracts. That's about 401 million. So what this shows us is a classic structure. It's front month delivery begins, right? We have non-delivery participants that's migrating this curve. That's just investors going in on paper. They have no interest in ever having silver delivered to them. So the paper stack is really not a single pile. It's more like a conveyor belt because there's all of these different players in this paper game. We're going to get more into this conversation of COMEX. I just wanted to give you a general idea as we start this live stream. Let's go over to today's charts and show you how wild silver had become today. When a metal that once surged to $120 an ounce suddenly stops trending and begins drifting sideways within less than $1.50 of movement, it usually signals that the normal rhythm of buying and selling has been disrupted. That's the key phrase here when we look at today's movement in silver, disrupted. First, I'm going to show you how a 6-hour window between 10 a.m. this morning and 4 p.m. Eastern revealed a strange shift in behavior inside the market. Then I'm going to break down how a $4 to $5 difference between the day's high and the afternoon trading band signals. It shows us hesitation in the market. And stay with me to the end of this live stream because I'm going to explain to you how this pattern often appears right before a major directional move. Major. This is actually a very exciting time for silver. Here's the part almost nobody's noticing. Despite global headlines pushing precious metals higher this week, silver hovered near $84 to $90. It's still roughly 9% lower than the previous week. 9% lower. This is not typical behavior for a metal that normally accelerates when uncertainty increases. Now, really lean into this part because it's important. When you examine the chart from early morning into the afternoon session, you see something unusual happening in stages. And it's around the morning opening, silver had already hit daily highs that were near $94.20, which means buyers were aggressive earlier in the session. But instead of continuing higher, price drifted downward and then it stalled around that $90 area for hours. That stall matters. It really matters. If you're new to this live stream, I host this live stream daily at 9 p.m. Eastern on the Pound of Gold channel here. My goal of this live stream is to break down the movement of silver that day and explain it in plain English so everybody can understand how we look at these charts and how this data gives us a good sense to figure out where the price of silver might be headed. That's my goal. So let's get right back to it. Oh, if you're new to the live stream, leave me a comment down below. Let me know where you're listening from and what time it is where you're listening. I love to hear that. So here, in plain English, just imagine a car is accelerating up a hill and then suddenly it's coasting neutral halfway to the top. I mean, that's really how we're feeling. Markets behave the same way. After strong morning pushes of 4%, 5%, the momentum simply fades. And the chart today began forming small candles that barely moved more than 20 cents, 40 cents at a time. Now, really keep this top of your mind because this is where people are missing. When silver stops moving after a big morning shift like that, it often means two different groups are quietly pulling in the opposite direction. That's the tug of war we're seeing. One group is still convinced silver should climb back to 100, a level that we briefly crossed early in this year. And another group believes the rally went too far, the bubbles popped, it went too fast, and they expect that metal to drift down toward $80, the $80 support. At the top of this live stream today, I told you I was going to show you how this pattern often appears right before a major directional move. Well, check this out. When we look closely at the middle of the chart from today, around midday, silver repeatedly tested that $90 line, and it failed to break above $91. That number becomes important because it acts like a psychological ceiling. These ceilings are so important to understand where the price of silver is headed. The greatest ceiling that we recently broke, if you started just getting into silver the past year, that was the $50 mark. If you jumped in to learning about silver and buying silver over the past 6 months, then you have no idea the pain that myself as a long-term silver stacker and most of you listening as long-term holders of silver, the pain that we held waiting for the $50 psychological ceiling to be broken. It just took literally decades. So and now you see, my point is, now that that's been broken, that psychological ceiling of $50, it's going to be really difficult to go back down to that level. We are clearly just keeping the momentum going. Now, in simple terms, really, what this tells us regarding today is traders are feeling like, is the move already over? Pay close attention to what I'm about to say here, because when price repeatedly taps the same level without pushing through it, in this case, roughly 3 to 4 attempts near $91, tells us that buyers they're present, but they're cautious. They're still stepping in, but they're doing so slowly, almost as if they're testing the water before actually diving in. And this is where it gets really important, because when silver's movement shrinks from $5 swings early in the day to barely $1 swing later in the day, the chart begins forming what technical analysts call a tightening structure. I'll explain that in regular language. It's just like squeezing a spring with your fingers. The pressure that you apply, the more pressure, the more energy builds up before it snaps. Markets behave the same way. Now, don't miss this, because silver's unusual behavior today. Oh, if you're new to this live stream, first hit subscribe. I host this live stream daily at 9 p.m. Eastern Time on the Pound of Gold channel here. Hit subscribe, don't miss it, because every day my goal is to break down the movement of silver for that day. I give you a technical analysis, but in plain English so everybody can understand and get a good sense of where we see the price of silver headed. So don't miss this, 9 p.m. daily. And let me know, is anybody buying? So if you're buying this week, put a 1 in the comment. And if you're selling this week, put a 2 in the comment, just so I have an idea of where everybody's at. I'll tell you right now, I'm holding. I am holding. So let's keep going. The unusual behavior today really cannot be separated from the bigger environment surrounding precious metals. We got global tensions. We have energy price spikes. We have rising interest rates that have created a situation where gold and silver are being pulled in different directions at the same time. Gold surged toward 5,100, almost 5,200 at the beginning of this week. And silver has stayed in place. Don't start shouting from the rooftops that silver's dead. It is not. We know that silver follows gold. We know that. That is the pattern of these precious metals. And at the same time, we also know that gold moves first and silver has a lag before it responds to gold. So it is exciting that gold is at 5,200. Not exciting if you want to buy gold, but it's exciting for us as silver stackers because we know that this metal is eventually, it's going to move, it's going to get there. It's just not moving quick enough for us. But really, it could take 2 months. It could take 3 months. Now, focus on this just for a moment, because silver is unique. It sits at the intersection of two worlds rather than gold. Gold is just really one-sided, but silver has its monetary position, and it also has the industrial use. So it's got two sides to it, and that's really key, because when those two forces are disagreeing, silver's chart can start acting strange. Now, stay locked into this, because this part really matters. If you look over the past 30 days and you keep that in mind, how silver has the industrial use and the monetary use along with it, you look at the past 30 days, silver has experienced some of the largest swings in decades, ranging from mid-60s all the way to $120. And then it settled around the $80 to $90 range. And that kind of extreme movement tends to leave the market unstable for weeks afterward. Think of it like turbulence after a storm. Even once the clouds clear, the air is still rough. Well, the air is clearly still rough. But zero in on this detail, because this number is really important. Earlier today's high near $94. Okay, keep that number in your mind. Earlier today, we're getting close to $94, and then followed by this sideways movement right, around $90. That tells us, or it suggests really, that traders are trying to decide whether the next major step is going up to 95, up to 100, coming back to that spot that we were so excited about, $120 range, or is it going to go down to the $85 zone? That's the fork in the road. One of the most telling signals from the past 6 hours is the shrinking size of the candles. If you're just a regular person, like most of us working a regular job, you don't study these charts and look at candles. Well, if you're really going to get into the world of silver stacking, it really helps. It does. It helps to understand this because early candles today were large. Some were $2 to $3 in less than 30 minutes. And when we're looking at a candle, it's telling us the low at that moment and the high at that moment. Just think of it that way. So sometimes they were $2 to $3 in less than 30 minutes. Later, the candles were tiny. They were in the cents, right? Less than 30 cents. And when a chart begins shrinking like that, it tells us that the traders are waiting for a catalyst. And yes, I agree. You would think that a war in Iran is a great catalyst. What more of a catalyst do you need to know that silver is going to be a safe haven, that money is going to be sent into the safe haven? That's what you would be thinking. But silver doesn't necessarily work like that. It's not like gold. It's just not. Gold is clearly the safe haven for geopolitical uncertainty, for wars. Cash goes into gold. Silver is not seen that way, the same as gold. It's just not. It's a different beast. But when we're trying to determine how the price of silver is headed in the next few days, in the next week, next few weeks, the price of silver could really break over that $94 if, and this is key, the chart is targeting a psychological level of $100 again. Now, here's what we have to be looking at to get to that point. Here's what we really need to be seeing. When the market repeatedly bounces off the same level within a short window, in this case, roughly, we had 5 reactions in under 3 hours. That reveals where the demand is quietly sitting. Just think of it like a basketball hitting the floor again and again. It's just trying to stay in the same spot, but sometimes it can't. And if the floor doesn't move, the ball is going to keep bouncing and staying in that same spot. So for the silver price, what makes today really unusual is not just that the range of time of price that we're seeing over that time period, but where it slowed down. Because normally the busiest hours in metals, trading in New York, is really when the markets are fully open. But between 1 p.m. to 4 p.m. Eastern Time, silver entered the quietest stretch of the day. And this is where things get really important, because when the market becomes unusually calm. Oh, if you're new to this live stream, let me know in the comments. Let me know where you're listening from. Let me know what time it is that you're watching this. I host this live stream daily, 9 p.m. Eastern on Pound of Gold. My goal is to break down the movement of silver in the day's movement of silver in plain English so everybody can understand and get a good sense of where we could see the price of this metal headed. That's my goal, to look at these charts, look at these candles, help you understand in just regular English. I'm just a regular guy. I'm just explaining it to you. That is my goal. So if you're getting any benefit from this, hit that subscribe button. I host this live stream daily. I don't want you to miss it. Now, don't miss this point, because this is really key. Another subtle clue appeared in the spacing between the price levels. Earlier in the day, silver jumped quickly between prices like 90, 92, 94. And then later in the afternoon, it just lingered around $89 to $90 for extended periods. It's kind of went from sprinting to walking. That's really what happened. And when we have a fast-moving market suddenly slow down like that, it tells us that traders are reassessing the risk. Some are taking profits. Some this is their point, that this is their exit point, and they're taking the profits. Just like you and I, silver stackers, we often feel like, oh, if silver gets to a specific level, then we're cashing out, maybe not on our entire holdings of this metal, but maybe a certain amount. Everybody has their exit. So traders are the same way. They're in $90 or $88 or whatever their exit is, they might have hit their exit, and that's what's making them pull out. So there's two pieces that we really see from today's movement. There's the psychological ceiling of $90, and there's profit taking that could also cause this sideways movement. But the great news for sideways movement is not that silver's dead. No, it's that when you look at the larger analysis of these charts, we see a cup and handle formation. And if silver is moving sideways, that could be the handle formation, which is bullish. That means that historically, that shows us silver is about to really move higher and higher. Sometimes it could really shoot up, just straight up, when we have this cup and handle formation. And the sideways movement, if it continues, it's good news in a couple of ways. First, it may travel sideways on your buy price. If $88 is your buy price, you might be here at $88 for a stretch of time, and that's keeping you happy. We're at your buy price. If it's not your buy price, you already have your own holdings of silver and you're waiting for it to shoot up higher, well, this could be the handle formation. Thanks for joining this live stream. Hit that subscribe button if you've not already. I'm going to be here tomorrow, 9 p.m. Eastern on Pound of Gold. And let me know in the comments where you're from, what time you're listening. Give me a good sense of what you guys, what time of the day you're listening out there. Support our channel sponsor. Thank you, Money Metals Exchange, for sponsoring this channel. They're giving away 20 silver eagles. Every month they give these 20 eagles away. Last month's winner was John S. from Farmers Branch, Texas. If you're part of that contest, it's free. Just click the link below. Last month, nobody claimed their prize. Nobody claimed their prize. If you want those 20 American Silver Eagles, you simply have to open your email from Money Metals Exchange. We sent out notifications to winners, and if you're not opening your email, then we have to go on to somebody else. So it happened last month. It's happened before. Don't be that guy. 20 Silver Eagles just sitting there. You don't want that. You want it sitting in your pocket for sure. I'll see you guys on the next one.